going on, guys? Welcome back to another video, and this is going to be a raw video this morning taken from one of our live streams at Arkhamtrades University. In this video, you guys see me not only be able to call the markets live, but create a daily bias as well as frame an entry and being able to call not only the bottom but also the top, and not only one market but across three markets. If you're a trader who's been struggling when it comes to ICT or calling the markets and daily bias, this video is going to be really helpful for you. So make sure, guys, watch until the end of this video. There's going to be one who may watch the first 2-3 minutes and then call it quits. And then there's going to be the other trader who's going to watch throughout the entire video and take notes and hopefully learn from this video and start implementing it into their own trading, right? Which trader are you going to be today, right? I hope you choose the second one, is the one that hopefully is going to see success inside of their own trading. But before we get into the video, make sure you guys are following me on Instagram. And if you guys want to be a part of future live streams, you guys can click the first link in the description and join Arkhamtrades University. Arkhamtrades University has access to over 60 plus lessons, top to bottom, beginner to expert, when it comes to ICT and SMC concepts, as well as we do daily live education with all of our students. So you guys can see us do this live every single day, as well as we do weekly progress calls with all of our students to make sure that they're seeing some type of progress and hopefully reaching a level of consistency as we hold their hand through it. If that's something that you want to be a part of, that's going to be a first link in the description. That's going to be it for intro. Make sure you guys watch until the end of the video. Take a lot of notes, implementing it into your own trading. And remember, if I could do it, anyone watching can do the same. It doesn't have to take long. Just put in the work and you'll get there.
Going forward, we could start seeing some type of ranges, like we saw here in September, where we were seeing really nice movement. Maybe some type of range next week going forward. Maybe some really nice movement lower. Narrative. I'm right. We're looking at the dollar here. We're still seeing the dollar pushing higher. We're still seeing the dollar pushing higher. So I'm still more so leaning on potentially the Dow Jones making an effort to reach lower. We did see we took out the previous day lows in the overnight session, so I want to see if we could maybe this would be a pullback to continue even lower, because we still have these multiple points of liquidity down here. Obviously, I thought we were going to take out these lows yesterday, but I guess yesterday wanted to do its own thing and consolidate. So yesterday we created these equal lows, and then today we came back lower. So it's very annoying when it does this, right? It creates all these equal lows, and then it doesn't take them out until the next day. But right, that's just manipulation and choppiness. We still have like these points of liquidity still like over here, so we still have an effort to reaching lower prices. Um, on the 1 hour time frame, we have this last up close candle. So I have this last up close candle on the 1 hour time frame. Yesterday was very weird for the Dow Jones, because even though everything right, the dollar was pushing higher, gold was dropping lower, multiple things of confluences signaling lower prices on the Dow Jones. The Dow Jones didn't necessarily go lower. So obviously yesterday was heavily manipulated, and there was really no setup. There wasn't a single setup. I don't see a single setup here on the, yeah, there's no setup here. So yesterday was a choppy day, no setup. Today we have, it looks a little better with this last up close candle, but yeah, as long as the S&P and the Nasdaq, especially the S&P, can find some type of rejection here to maybe reaching back lower prices, then that should be good for the Dow Jones. And as long as the dollar can continue making higher prices, that should be good for lower prices on the Dow Jones. But at the moment, um, it's really been 50-50 this week, which is what you'd expect for an FP week. An FP week is usually heavily manipulated. A lot of price action gets stuck in a range throughout the whole week, and then NFP will take out both sides of that range. So when it comes to trading NFP week, it's important to use less risk, right? It's important to use less risk and being a little bit more patient when it comes to setups. So focusing on the higher time frames rather than the lower time frames, because you can get chopped up a lot easily on the lower time frames. and using less risk. So that's the key things when it comes to trading NFP, using less risk and focusing on the higher time frames. Because it'll chop up very easily and the volatility is a lot. So when there's a lot of volatility but it's choppy, that's a disaster for, like it's a disaster for blown accounts. So, guys always want to be patient when it comes to NFP. Just take breathing, not really taking much trades. I could maybe look at other markets, try to, also frame some type of narrative for them. Dollar looks like it's stalling here. It'll probably consolidate throughout the remainder of the day for dollar. So I probably wouldn't trade gold today. Yeah, there you go. Came into that 1 hour order block level. Starting to see that drop there. I've noticed every single day this week at 9:30 opening price, the market dropped. As 9:30 opening price, the market dropped every single day. And then after that, the market reversed. Wednesday dropped, then reverse. Tuesday dropped, then reverse. Monday dropped, then reverse. So just seeing gold push higher. This dollar up down, still not doing much. Nasdaq and S&P are pushing higher. It's very interesting. A lot of engineered liquidity has been happening this week. The price will come near a low. Don't take it out. Actually, Nasdaq came back into this inversion level. The internal range liquidity would be back inside of this bearish or fair value gap. Then if it can break above this bearish fair value gap, this Asia high. See the Dow Jones reaching out into those lows. They're reacting off of that last up close. Candle here, this order block up on the 1 hour. Now we got the low of week here. This Monday low and the prior weekly lows down there. Yeah, pretty strong. Price finally takes out that Monday low. I wanted to see that Monday low get taken out. Tuesday came close to it, didn't take it out. Then yesterday came close to it, didn't take it out. Now it finally takes it out, man. It's crazy, man, um just how this week has been. It held off taking out that low for 2 days, and then one day it just decides, okay, I'll finally take it out. Finally, okay, fine, fine. I'll finally start taking it out. When see Nasdaq start pushing higher, because it's very annoying when that happens. Yeah, yeah, good pusher. Yeah, exactly. Think on the 5 minute, there was a little retracement a bit, kind of like 9:35. Came back into that 1 hour order block to reach down lower prices. That was a pretty good setup, actually. From the opening price here of this order block to this low, about 140 points. Pretty solid. Yeah. Then we have these prior weekly lows, which it'll finally come down and take out. Finally. Finally, man. Yeah, man, the market this week, man. I've been wanting to see it take out those lows since Tuesday and Wednesday. Consolidated both days. And then it finally on a that's what I'm talking about, man. When it comes to NFP week, a lot of the movement happens towards later into the week. It literally consolidated throughout the entire week, and then towards the end of the week, it finally took out the liquidity pool that we've been looking to take out since Monday. Since Monday, we've been looking to take this level out, and it takes it out later into the week. I wanted to see it taken out yesterday, based off of yesterday's order block. Right, just last up close level here on the order block yesterday. Uh, yeah, didn't really break it. Yeah, yeah. If I took the short here inside of the yesterday's last up close candle, there would have been like an overnight session trade, which I can't trade overnight on a prop firm. So yeah, it wouldn't really have worked out. But yeah, we've been looking at that setup since yesterday, and it's finally panning out. We can see the Nasdaq pushing back higher into this fair value gap level. Yeah. When the Dow Jones and Nasdaq are in opposite direction, the S&P consolidates. So look at the S&P, you're just chopping around. Got this inversion here. I think the S&P could maybe push higher. Um, I think I'm not sure it's 50-50 at the moment, but I'd much rather it push higher. Uh, because then that would mean that Dow Jones came down here to take out liquidity, and then it could maybe start pushing higher prices, while the Nasdaq continues to push higher prices. And obviously, yesterday we had that SMT here with the Nasdaq, where Nasdaq didn't take out that low, so this could be a pretty good market structure point, and then this could be like a higher level to maybe reach back above this high, and like this Asia session high. On the S&P. That's really about it for the most part. But for that to happen and start pushing higher, the Dow Jones would also have to start pushing higher here. So the Dow Jones uh, needs to like find some type of support here to start pushing higher, or or if the Dow Jones continues to drop lower, the S&P is just going to continue falling lower with it. Nasdaq still holding up here. Came back inside this 5-minute fair value gap here. Now it's got this last down close here. Saw that initial push higher at 9:30, a little 5-minute fair value gap here. Came down to 25%. Yeah, that 25 Tuesday, I missed out on that trade on Tuesday because I put my limit order at the 50% for the Dow Jones and it missed it by 6 points. So now, like, almost all my trades are at the 25% because I no longer trust the 50%. Because it'll do some shit like this. It'll come at that 25% a lot of the times, but it's half and half for the 50%. I think if I'm gonna trade at 9:30, it has to tap into some like 1 hour order block or something, or some type of like 1 hour or higher time frame PD array. There's nothing wrong with trading at 9:30 opening price, but um It's just very annoying if you like take a trade at 9:30 and then it loses. Now it's like, damn, market just opened. I already took a loss. That's the only that's the only downside to trade at 9:30 if it loses. You take a quick loss, but sometimes, you get situations where 9:30 opens up and it taps into your PDRA and then goes in your favor. So that's pretty good at times. Nasdaq seeing a jump here, like we talked about, reaching back into that internal range of liquidity. This bearish for value gap here. So um 9:30 opened up. Then we saw this retracement at 9:40 into this fair value gap level 25% after reacting off of that 15-minute inversion. So came down into this 15-minute inversion level. Saw this spike to the upside. Right, that's pretty bullish order flow. Obviously, we have a drawn liquidity that bearish for value gap. We had this bullish for value gap down here on the 5 minutes, right? When it comes to trading Nasdaq, the 5 minutes is pretty good. Nasdaq is more so of a scalping pair, so lower time frames is very key on Nasdaq. So 5 minutes, come down to 5 minutes for value gap, push higher, last down close candle. So if you miss this for value gap trade, there's this last down close candle here. All right, reaching back higher. And then we talked about if price broke above this bearish for value gap, it reached back up above these Asia highs between 8 to 12 a.m. It looks like it's reaching back up there. And the S&P 500, we talked about the inversion fair value gap here. It looks like it came down to the 50% here of this inversion level. And now starting to see higher prices reaching back above this high and then eventually back above those Asia highs. Dow Jones starting to find support down here after taking out that level of liquidity. Just broke back above this inversion level. I'm gonna make a fake trade here. Let's say we saw price break above this inversion fair value gap here, and we took the long, something like that. I don't know, maybe like a 2-to-1 R. Let's see how this would then play out. But we're inside this bearish fair value gap here, though. Yeah, gold is consolidating. Dollar is still consolidating. Yep. It's just risk management for Nasdaq. Oh, was there 10 a.m. news? Probably, but we got a good stop loss and play. Yeah, I guess it was 10 a.m. news or some shit. Let's say, okay, news open, didn't really take us out. Now I want to be greedy or something. I don't know, maybe a 3-to-1 R. But let's check it off at that 2-to-1 R. What would be 2-to-1 R like back right here? So 2-to-1 R would be right here. 3-to-1 R would be like back up here. Nasdaq broke back above those Asia highs. S&P reaching back above this high. Dow Jones about to hit that 2-to-1 R target. Just hit that 2-to-1 R target. Let's put our stop loss back at break even. Let's see if we can continue higher for that 3-to-1 R. Nasdaq reached back up above those Asia highs. S&P took out that London high, like 80% of our position off at 2-to-1 R. So we took 80% of our position off at 2-to-1 R. Stop loss back at break even, reaching back above 3-to-1 R for like 20% left. And just like that, take profit. S&P reaching higher, Nasdaq reaching higher. Yeah. And that's how you call the markets. I mean, I'm telling you guys, man, this whole shit is rigged. This whole shit is rigged. Um, yeah, this whole shit is rigged. That's how I'm able to rinse these markets, but you have to learn the language first. Yeah, I've tried a lot of businesses in the past, like drop shipping and stuff like that, but nothing comes close to trading. It essentially prints money. All you have to do is just say, "Oh, I think it's gonna go higher than long," and you make money. Um, you can trade in your underwear. It's actually pretty ridiculous. I don't know any other business model like trading. Trading in my underwear, 37K payout yesterday. 37K payout yesterday. Trading in pajamas. Like, who the hell does this? Right? Sometimes you know exactly what the market's gonna do next. Like some days like today, and then some days like yesterday um where days like these you're just meant to lose. Like you're not meant to make money on days like these. The goal of days like these is to take you out the markets and make you lose so they can take your liquidity and use it for the next day for a news event coming up. But for the markets to move, they have to gather liquidity. And who's the liquidity providers? The retail traders. You provide them liquidity, they move the markets. It's they allow you to trade their markets because 40, 50 years ago or 60 years ago, you couldn't trade unless you were like licensed. So they allow you to trade their markets, but in return for you trading their markets, you have to be their liquidity provider. So they're gonna create days where they're gonna chop the markets so you lose to provide them liquidity so they could move the markets in the direction they want. That's pretty much the business model, and so that's why if you lose on days like these, you can't really uh, beat yourself up about it. That's kind of just like a business expense. Okay, okay, here you go. Here's my monthly, here's my weekly paycheck or weekly fee for trading your markets. Right? You use me as liquidity today. Here, here's my money. Here's my weekly fee. And then after you pay your weekly fee, okay, we used them as liquidity. We took their money. Now we're finally gonna now we're finally gonna run smooth. It's like a landlord. Like you have to pay your rent. Yesterday you paid your rent by losing. Now today you can now today you can live in the house. Definitely could have been greedy on this trade, reaching back above that 930 high. Because when we reverse, um, during the opening price, right, during we reverse, usually an area of targeting would be back above the 930 highs. So if we wanted to be greedy, could have definitely held it a little bit longer, or at least back up above like the 50% of this wick. Right? You don't always have to take profit at the highs, but 50 or 70% of the wick is solid because price usually comes to that area. But that 930 high, I'm just gonna be greedy. I'm gonna be greedy. I'm gonna be like it's gonna take out that high. Yeah, I'm already knowing it's gonna take out that high, so I'll be a little greedy. Let's go. Yeah, when there's heavy momentum inside the marketplace, like this, then I tend to move my take profit a little bit higher. Um, so instead of like a 2 to 1 hour, I might get like a 3 to 1 hour. But if it's still going, I might get like a 4 to 1 hour, reaching back above liquidity. But obviously, don't push it. But let's say 4 to 1 hours up here. and your 3 to 1 R is down here, price breaks above the 3 to 1 R, and you move your take profit to a 4 to 1 R. If price doesn't hit that 4 to 1 R but comes down to 3 to 1 R, then you take it off at 3 to 1 R. Right? Just so when that momentum continues, you can continue to move your take profit higher just to maximize on the trade a little bit more. Hopefully you guys saw that setup. As price broke above like this bearish for VAG gap here, right? That inversion for VAG gap, we saw the NASDAQ and S&P making an effort to push higher around the same time. So as price broke above this bearish for VAG gap, anticipating a potential reversal after taking out these liquidity pools, reaching back higher prices. Put our stop loss back below this low. Back at like this rejection block level. Back at this rejection block level, which was about 44 points. But if you want to be pretty conservative, you could put it down here. 70 points stop loss. But obviously, as price continued higher, I would have most definitely scaled into my position after price broke above this bearish VAG gap. Scaled into my position, reaching back above these reaching back above this 930 high. But yeah, today was pretty solid. I mean, nah, I just wish today's price action was flipped around and was yesterday. Man, I would have made a lot of money yesterday if today's price action looked like yesterday. NASDAQ, you guys already saw the breakdown for the NASDAQ and the S&P. We talked about the S&P and that inversion was going to push higher. And it just took out that 8 session high. And now it's starting to drop. Nice. So you would have gone in, so you would have gone long at the exact low, and you would have sold the position at the exact high. About 28 points. That's pretty solid, man. I'm looking forward to next week. Looking forward to next week. Man, trying to destroy it next week. Going to next month in December. Gonna look to destroy it. 15K payout, or not 15K, but 15K trade Tuesday. Let's see if we could beat that record next week. Can't say we didn't, you know, can't say we didn't time it. Pretty much it from our end. We had caught our trade for today. Caught our trade for today. Yeah, came back into that order block right there. 5 minutes. So a lot of people that could, fake it, show it hindsight, but you got to see it live today. Basically every market, every indexee called the high on S&P, called the move higher on NAS, and called the reversal was gonna trade on the Dow Jones. Came down to this fair value gap level. Don't want to be too greedy at times, right? Like we talked about, let's say you wanted to come up into the high, it failed to take out the high, it came back down here. Like, so if this was a 5 to 1 R and 4 to 1 R was down here, if it failed to come up to a 5 to 1 R, just take it out for a 4 to 1 R. As price reverses lower. You don't want to be greedy. Obviously, you want to, make more money as the momentum continues, but you don't want to be delusional to think that price is going to go up 300 points. So you can catch the momentum as it's going, but don't, don't overextend or buy more than you can chew. Because many times, especially on Dow Jones, price could just reverse on you. So always be adamant about profit taking. But yeah, you guys can see there, we talked about that Asia high here. On the S&P, price came into it perfectly from down here to up here. Yeah, that looks like it's pretty much done, to be honest with you. We got our entries, we got our setups. Now, what you do is you walk away. After you enter your trade, you just walk away. And we talked about how just calling the market. So that's pretty much about it. I'll see you guys next time.
Me and my brother Spectrades have come together and launched SparkTrain University. Coming from humble beginnings, Train has changed our lives and we're able to escape poverty and now live a life of abundance in only 1 year. If we could do it, everyone watching this video can do the same, and it does not have to take long. And that's why we developed a framework that anyone can use inside of SparkTrain University that gives them the same results that we got, if not even better, and we want to hold every student's hand inside of SparkTrain University until they are profitable. Stop going about it alone and let me and my brother be your new mentors. And for this video, I'm opening up 5 slots for the next 5 people to join SparkTrain University. You can just click the first link in the description to join SparkTrain University.